today we're going to tackle something even more exciting, and that is futures trading. Ladies and gentlemen, I would like to introduce to you the Gem Hunter. Yo, what is happening, crypto gem hunters? We are back with another outstanding episode for you, and today we're gonna dive deeper into more awesome features that MEXC has. If you haven't registered an account with MEXC.com, you are missing out on a great deal of opportunities to diversify your investment portfolio, to receive a bunch of awesome rewards and airdrops. To register with MEXC, use the QR code right here or the link down in the description box, and you will get 20% off your trading fees. Now let's talk about how you can get that 125x with MEXC. In our previous episodes, we've been talking about spot, margin, and ETF trading. However, today we're going to tackle something even more exciting, and that is futures trading. Futures is a derivative trading product that provides high leverage up to 125x. Leverage allows for better capital efficiency as traders don't have to lock up entire amounts of the capital. However, it increases both the returns and the risks, so traders must always exercise caution. We've decided to create this video for you so that you are fully prepared to trade futures on MEXC.com. In a futures market, two counterparties will trade a contract, not a physical or digital asset, but a contract that defines the settlement at a future date. There is a special type of futures contract called perpetual futures contract, which is quite common in the crypto market. Unlike the traditional form of futures, it doesn't have an expiry date, so one can hold a position for as long as they like. I'll share more details later on. Why trade futures in the first place? Leverage. You can enter a larger position with only a fraction of its total cost. Short exposure. Futures trading allows you to bet against the market by shorting it. Hedging. Futures trading can be used to hedge against the spot market, which is great for any investment portfolio. Now let's see how this works in practice. Log into your MEXC account, go to Derivatives at the top of the page and click on the Futures tab. Then click on the Accept and Continue button to activate your MEXC Futures account. And you're ready to trade futures. Alright, the MEXC Futures interface consists of 5 parts: menu, price chart, trading activity panel, order book, and the order entry field together with leverage. There are 2 prices besides the price change. That is the index price and fair price. The index price is a price derived from a bucket of prices of the major spot market exchanges, while the fair price is calculated based on the index price and the funding data. The fair price is designed to avoid spikes and unnecessary liquidation during high volatility periods. MEXC Futures calculates the liquidation prices based on the fair price instead of the latest transaction price, thereby avoiding unnecessary liquidation. Alrighty, to the right of the page, we have the order entry selection. MEXC Futures supports cross-margin and isolated margin trading. This selection of either mode will affect the margin balance calculation of your positions. The margin balance is your MEXC Futures account balance, including your unrealized P&L. Profit and loss. So your profits and losses will cause the margin balance value to change. By using the cross-margin mode, this balance will be shared across all your positions. And by using the isolated margin mode, this balance can be allocated to each individual position. I keep repeating the word liquidation and just want to clear this up for you for those who might not be familiar with this term. Liquidation happens when your margin balance falls below the required maintenance margin. Maintenance margin is the minimum value you need to keep your positions open. And it varies depending on the size of your positions. Larger positions would require a higher maintenance margin. So when liquidation happens, all of your open orders are canceled. Ideally, you should keep track of all your positions to avoid auto liquidation, which comes with an additional fee. If your position is close to getting liquidated, it may be beneficial to manually close the position instead of waiting for auto liquidation. Let me give you an example. You start with $100. You enter a leveraged long position in the BTC USDT perpetual contract with 10x leverage, meaning your position size will be $1,000, which consists of your $100 plus $900 that you borrowed. What if the price of Bitcoin goes down by 10%? Well, the position is now worth $900. If the position incurred further losses, those would apply to the borrowed funds. The lender of those funds won't risk a loss on your behalf, so they liquidate your position to protect their capital. This means that the position is closed and you've lost your initial capital of $100. Liquidation is one of the risks of futures trading, so make sure you use high leverage only once you get a good grasp of the concept and only once you get enough trading experience. Not giving any financial advice here, just sharing some thoughts that would help you guys. Let's get back to the trading view once more. You can choose the amount of leverage that could be applied on your open position all the way up to 125x, whether you are trading long or short for both isolated and cross margin. Again, if you mastered leverage trading and are sure in what you're doing, you could be profiting big time from such leverage. So let's use the MEXC's calculator to get an idea of your potential profits. If, let's say, you would buy BTC at a price of 40K and sell at a price of 45K with 125x leverage, with the position size being 10,000 contracts, or in other words 1 BTC, then you would need to invest 320 USDT of your own, and as a result you would get 5,000 USDT of earnings, which would be a 1,562.5% yield. Now that we did the math on your potential earnings, you simply choose market, input the amount that you are ready to invest, and click either long or short with the desired leverage. Additionally, you can choose stop loss or take profit and set a price at which you would like to close the position once it hits a specific price. Before doing that, just make sure that you have enough USDT in your futures account by transferring them from your spot account. If you don't have any USDT, watch this video here where we explain how to fund your MEXC account. And this concludes our brief overview of what futures trading is. So go ahead and explore this wonderful feature of the MEXC platform by signing up through the QR code here or the link down in the description box. Thank you for watching. Don't forget to like the video and subscribe for more. I'll see you next time. We have a new competition going on from April 29th up to May 7th, so there's still time for you to take advantage of this amazing opportunity. Right now on your screen you see the details of that along with the QR code that you can scan and register with MEXC.com to participate in this competition. Also down in the description box you have the steps to follow in order to participate, and there's a prize pool of 50,000 USDT up for grabs. So make sure you take advantage of this opportunity. Don't forget to subscribe for more and smash that like button.